Okay, so let's unpack this. We've got a stack of research here that points to a specific, legitimate way for American small businesses to get capital back.
Capital they've already spent.
Exactly. Money they've essentially overpaid to the government. We're talking about the research and development, or R&D tax credit.
Right.
And if you're listening and that little voice in your head immediately says, R&D, that's not for me, that's for tech companies, then you are precisely who we need to talk to today.
That internal self-disqualification is the #1 myth we have to bust right off the bat.
Yeah.
The whole picture of, test tubes and clean rooms, it's just severely outdated.
It's an old image.
A very old image. The rules have changed. The scope of what actually counts as research is so much broader now.
So what's our mission for this deep dive?
It's simple. We want to give you the knowledge to figure out if your business is one of the thousands that has been overpaying its taxes and how to claim that money back.
Because the research shows that if you're innovating, if you're improving your processes, developing better systems, really in any industry, you likely qualify.
You do.
So the main message here is don't disqualify yourself. Don't make that assumption.
Exactly. And to make it easy to explore, we should probably give you the simplest next step right now.
Good idea.
There's a way to get a free, completely no-obligation consultation with specialists in this. The place to go is capabilityamplifier.com/tax. Just keep that in mind, because everything we talk about next is just the background you need before you take that one easy step.
Let's start with the history then, because it really explains why this all feels like a secret. Why isn't every CPA just flagging this for their clients?
Well, it's not necessarily bad accounting. It's really just an outdated paradigm. You have to go all the way back to 1981.
Okay.
The U.S. auto industry, the whole manufacturing sector, was just getting hammered by competition from abroad, especially Japan.
Right.
So the government created the R&D credit to incentivize American innovation. The idea was to push companies to hire engineers, develop new things, and get competitive again.
But for a long, long time, that incentive was really only for the giants.
Precisely. From 1981 all the way up to 2015, the credit was structured so that really only huge corporations with massive R&D departments could benefit.
It was too complex for a small business.
Too complex. The benefits were too small to bother with. So if your accountant, the one doing your payroll, trained any time before 2015, their default setting is just R&D credit, not for small businesses. Ignore it.
And that's the legacy problem we're dealing with.
It is. It's a very specialized area. But then around 2015, things opened up. The credit became much more accessible to smaller companies, even startups. But that old knowledge, it just persists.
And now there's an even bigger change, a huge shift that creates some real urgency. It has to do with how businesses had to treat R&D costs.
Yes. For the tax years 2022, 2023, and 2024, if you claimed R&D expenses, the rule was you had to amortize them over 5 years.
Which is painful.
It's awful for a small business. It means you spend, say, $100,000 this year, but you only get the tax benefit in these little chunks over half a decade. It crushes cash flow.
So it's the game changer.
The game changer is coming after July of 2025. Businesses can now go back and amend those 2022, 2023, and 2024 returns to claim the full benefit immediately.
Okay, wait. So instead of waiting years, you get a refund check for those past overpayments right now.
That's it. And that's why we have to talk about the July 6, 2026 deadline. That is the absolute cutoff to claim those 3 prior years of immediate refunds.
The very tight window.
It is. And to grab that opportunity, you need to understand the mechanics. Specifically, this concept people call the double dip.
All right, let's break that down, the double dip. This is where the tax jargon usually loses people.
Let's make it simple. Layer 1, it's just the normal business deduction. You spend money on salaries, software, whatever. That expense reduces your taxable income.
Standard stuff. It lowers the amount of your profit that gets taxed.
Right. But layer 2 is the R&D tax credit. This is the magic part. A specific portion of those expenses, what are called qualified research activities, generates a credit.
And a credit is different from a deduction.
Very different. A credit is a dollar-for-dollar reduction of the taxes you actually owe. It's not reducing your income, it's reducing your final tax bill. That's way more powerful.
So let me see if I've got this. I spend, say, $100,000 on salaries for staff who are building a new internal software for my business. That's a qualified research activity.
Let's assume it is for now. Yeah.
First, I get the normal deduction for that 100 grand, but then I also get an additional tax credit, maybe $10,000 to $15,000, that comes directly off the tax I owe the IRS.
That is powerful. And that refund, when it hits your bank account, is 100% tax-free money.
Okay, so we have to define those qualified research activities. What's the test?
There are 4 tests, actually, and you have to meet all of them. But remember, this is about business innovation, not, academic lab work. Let's use an example. Say you run a small manufacturing shop, and you're trying to improve your welding process with some new automation.
Okay.
First, is there uncertainty? Did you know for sure if it would work before you started? With the welder, you don't know if it will integrate with your old tools or give you the right material strength.
Mm.
So yes, technical uncertainty.
Makes sense. If you're just following an instruction manual, there's no uncertainty.
Exactly. Second, is there experimentation? Are you testing things, trying different settings, iterating? You're probably testing different temperatures, different feed rates for the welder. That's experimentation.
Okay, number 3.
Third, is there a technical process? Are you using principles of engineering or science, or even just a systematic approach to figure it out? You're not just guessing. You're documenting what you try.
And the last word?
And fourth, is there innovation? Are you making something new or significantly improving an existing product or process? If you automate that welding line and boost your output by 20%, you've definitely met the innovation test.
And if you meet all 4, it doesn't matter what industry you're in.
It doesn't matter if you're making widgets or delivering patient care. You are likely conducting qualified research activities.
That makes it much clearer. Which brings us to, I think, the most important part of this, the anti-self-disqualification part. Let's talk about the unexpected businesses that qualify.
Yes, let's pull that aperture wide open. Forget the obvious software companies. Let's start with medical practices.
Wait, how does a doctor's office prove they're experimenting? To the IRS, doesn't that just look like standard patient care?
That's the distinction a specialist makes. They're looking for things like developing new patient care protocols that integrate new, complex technology.
For example?
A dental practice testing out new 3D printing methods for custom aligners. Or maybe a medical group that's implementing and systematically testing a new AI tool for diagnostic screening and building custom workflows to make it work in their practice.
So it's not about inventing a new cure, it's about innovating the technical delivery of the service.
You've got it. That's the shift in perspective.
What about professional services, like a marketing agency or a consulting firm?
Absolutely. If a consulting firm is building its own proprietary software for client delivery, not just using off-the-shelf stuff, but actually coding and testing their own custom tools, that qualifies. Or creating new technical frameworks that require systematic testing. They're basically a software company building an internal product.
Okay, let's do one more. How about specialized manufacturing and construction? Not the big guys.
No, we're talking about firms developing custom solutions. A custom home builder who's testing and iterating new energy-efficient structural designs. Or a small metal fabricator experimenting with new alloys to meet a client's unique specs. They're running real-world experiments to solve technical problems.
The key distinction seems to be that you don't qualify if you're just a standard operational business, or a retail store, a normal hair salon. There has to be that systematic effort to improve something technically.
And this all comes back to that common mistake. Assuming your regular accountant should have told you this.
Right.
It's just a separate specialized field. The documentation, the analysis, it's too deep for most generalists.
Yeah.
You can't assume. You have to let a specialist take a look.
So if you're listening to this and you run a medical practice or a consulting firm or a specialized building company, and you're thinking, wait a minute, we spent a lot of money in 2023 testing a new system.
Then you need to act. This is our midpoint check-in. The deadline for those past years is getting closer. So if this is resonating, just pause the self-doubt for a second and take that zero-risk step.
Go to capabilityamplifier.com/tax.
Exactly.
Let's really hammer home why that July 6, 2026 deadline is so urgent.
If you miss that date, you lose the chance to amend those returns for 2022, 23, and 24 under these new, much better rules. That's 3 years of potential cash refunds that will just stay with the IRS.
Let's talk real numbers. The examples we saw in the research were pretty staggering.
Oh, they were. We saw a multi-location medical practice owner who was integrating a lot of AI into his patient systems. He qualified for a $550,000 credit.
Wow.
After fees, he got a tax-free refund of almost $400,000. Capital he put right back into the business.
But it's not just for businesses that big, right?
Not at all. There was another example of a small industrial firm, maybe $450,000 in gross revenue. They qualified for a $5,000 credit just for testing new fabrication techniques. It's a huge range, a few $1,000s all the way up to $500,000 or more.
For any business, that's meaningful capital.
It's capital to accelerate growth, not just, fill a hole in the budget.
Okay, the process. The idea of getting a government refund sounds complicated, but you keep saying it's zero risk to explore. How easy is it to start?
It's designed to be completely painless. Step one, when you go to the resource we mentioned, is the initial consultation. It's free, no obligation, takes about 20 or 30 minutes, just a high-level chat.
And if that looks promising, what's next? What's the time commitment?
Step two is the detailed review. The specialist gathers your project info, but they do all the heavy lifting. The sources say it only takes about 1 to 2 hours of your team's time total. That's it. Then step three, they do the calculation and report. You get a precise document saying exactly what you qualify for.
And then you decide.
Right. Step four is the filing decision. You look at the number and say yes or no. Only if you say yes do they move forward. And step five is the refund, which usually shows up in 3 to 6 weeks.
What's the safety net? What makes it truly zero risk?
It's the contingency fee structure. There are no upfront fees. None. You pay nothing if you don't qualify. You only pay a percentage fee after you get your money.
And what if there's an issue down the road?
Even better. If the IRS were to ever challenge the claim and take the money back, the fee you paid is guaranteed to be refunded to you. The specialist's success is completely tied to your success.
Okay, so you get this unexpected check. Let's talk about the mindset. This isn't just savings. This is about strategic reinvestment.
It's some of the cheapest capital you can get. Instead of just seeing it as a refund, you should see it as fuel for growth.
So you could use it for what?
Invest in that advanced tech or AI you couldn't afford. Fund the next cycle of innovation. Expand your marketing. Hire that key engineer you've been needing.
The credit basically de-risks your innovation budget.
It does. If you try something new and it fails, the government just gave you a partial rebate on the attempt. If it succeeds, you have new capital to pour into that success. It's permission to be bolder.
It turns a cost into an investment.
An investment with a subsidized, guaranteed return.
We have to address the final objections people have. The first one is always, this just sounds too good to be true.
It sounds that way because it's so underutilized by small business owners. But you have to remember, this has been law since 1981. This is a deliberate government policy to encourage innovation. It's 100% legitimate.
What about the fear of an audit?
A good specialist is defined by how defensible their claims are. They don't just find a number. They build the entire documentation package to back it up. And as we said, the fee structure protects you from financial risk, even in that remote chance.
So we have to come back to the deadline. To get the maximum benefit for those past 3 years, 2022, 2023, and 2024, you have to act before July 6, 2026.
Don't let indecision today cost you 3 years of refunds tomorrow.
The risk versus reward here seems pretty clear.
It is. The worst case scenario, you spend 30 minutes on a call and learn it doesn't apply to you. Best case scenario, a significant tax-free check you can use to grow your business. That's an exploration worth taking.
Okay, so here's the immediate, non-negotiable next step. If you are a small business owner and you have done any kind of innovation or process improvement in the last few years, go right now.
Go to capabilityamplifier.com/tax.
Just remember the deal. It's a free consultation, no obligation, zero upfront cost. You're committing 30 minutes to find out if you've overpaid your taxes.
This isn't just a tax loophole. This is capital the government has set aside to reward and accelerate innovation. When you claim this credit, you're doing exactly what the system was designed to encourage.
Don't let an old myth make you disqualify yourself. Don't wait until that July deadline is right around the corner. Take action. Go to capabilityamplifier.com/tax.
And of course, our final note, this is educational content, not specific tax or legal advice. You should always confirm the details of your situation with a qualified tax professional.
Capabilityamplifier.com/tax. It's time to claim what you've already earned.